Well, ladies and gentlemen, Greg Michalowski here. Today's date, October 2nd, 2015. Unemployment day on Friday. Let's go through some of the technicals and fundamentals that we saw in trading here today. First, non-farm payroll came out much weaker than expected, 142,000 versus 200,000. Prior 2 months were revised down 59,000 as well. The unemployment rate remained steady at 5.1%, but the participation rate came down again to 62.4 from 62.6%. The average hourly earnings were unchanged versus 0.2% expected, and the average work week also lower at 34.5. So overall, a weaker unemployment report. That sent the dollar lower, including the dollar versus yen. We fell below trendline support here at around the 119.38 level. Remember that level. And on our way to the downside, we could not get below the September low. That September low came in at 118.51. Our low for the day could only get down to about the 118.67 before the market started to rebound back to the upside. All would be okay as long as the price remained below the 119.38 level. But if we go to our 5-minute chart, look at that 119.38 level. What happened right around here? We started to move above that 119.38 level, and at first it was a little slow going, and then we started to develop some momentum to the upside as shorts forced to cover here. We saw the stock market turn around. The Dow Jones is currently up around 84, NASDAQ up 42, S&P up 11.74, and that forced the market to the upside here, short covering in the dollar versus yen, and we saw the price move all the way back to where we started. We started the day at 119.91, and we're currently trading at 119.94 as we head into the close of the day. So we're ending the week just below the 200-hour moving average. That's this green line right up here. But looking at the daily chart, we're right in the middle of our triangle once again, and we're right in the middle of the square once again. That square encompassed all our September trading range in a circle, or in a square and in a triangle. That sounds like trouble for me. Market doesn't know which way it wants to go. We'll have to figure that out next week. Let's take a look at the euro versus US dollar. And like the dollar versus yen, this currency pair was on the negative side versus the dollar. The euro went to the upside and the dollar got sold off. Now the move to the upside came up right up to the top side trend line. That top side trend line came in around the 113.23. and our high price came in at 113.17. Failure to get above that trend line started to send the price back to the downside. I'm going to go to the hourly chart. If we take a look at the high price going back to September, I'll zoom in here. September, there we go. September, what is that? 18th down to our low on September 23rd. The 50% retracement comes in at 112.82. That was also near our high price from September 29th, 112.81. And when the market started to come back down below the 112.82, you'll see that on the 5-minute chart. Here's our 82 level. Went a little bit below it here after the initial spike to the upside. You expect that, then tested it, made our new high, came down, tested it again, and then fell below that level. Our next high corrective price got up to 83 before the market started to rotate to the downside, and that's where traders started to give up. The Friday effect on unemployment started to come into effect, and we moved even below the 50% retracement of the entire move to the upside. We are remaining above the closing level from yesterday. Yesterday's closing level came in at 111.92, but things are back into the sort of non-trending type of area here in between support against the bottom side trend line, against resistance on the top side trend line, and like the dollar versus yen, we're going to have to figure that all out next week. Or just remain in the range here as the market tries to digest which way the Fed's going to go and which way the dollar is going to go as well. Let's take a look at the sterling versus US dollar. In this currency pair, take a look at the May low here. The May low came in at 150.85. Our low for the day came in around 151.06. Got within about 20 pips of that. Also, what we did here in this week's trading is that we moved below this yellow area, which also incorporated some lows here, swing low here, swing low here. And weren't able to stay below that level. And in fact, we're moving back above the 151.88 level, which was this low going back to early June, or trying to stay above that level. And this yellow area is going to remain our support level going into next week's trading, 151.56 to 151.88. If the market's going to move to the upside from here in the sterling versus US dollar, we're going to have to stay above those levels. We're seeing obviously some movement back to the downside here in the late trading, similar to what we're seeing in the dollar reaction versus the euro, the dollar reaction versus yen. We did come down to around 50% of the day's trading range here, around the 151.80 level, and finding support against that level. In next week's trading, this is the hourly chart. You see all these lows. We have this low here, we had a low here, and then we started to move and use this level as a high. We broke above here, but then reestablished this level as a high, as a high, as a high. And in today's trading, we moved above all those levels, also moved above the 200-hour moving average, but we couldn't stay above that level. If we're going to go higher here, if we're going to say that the base is in play, we're going to need to get above the 200-hour moving average. We're going to need to get above the 52 level, the 52.611 level on the top side. We're going to need to stay above those levels. If we can't do that, we ain't going higher, right? Right. All right, let's take a look at the dollar versus Canada. We saw this currency pair move to the downside here on dollar weakness, and we're continuing to see the weakness here. It is closing near the low levels. Some of that is as a result of what we saw in trading this week for the dollar versus Canada. We saw some weakness here off of the break of the trend line, also the break of the 100-hour moving average. Started to move through other levels here, including the 38.2% retracement, the move up from the September 18th low, and then moved through the 50% retracement here in trading here today when the dollar got hit. Now we are finding some support against the 61.8% at 131.78 level. We'll be looking at that level in early next trading next week to see if the market can move and stay below that level and continue this move to the downside. It may see the price go down and test the 130 level in the dollar versus Canada. Let's take a look at the Aussie versus US dollar. This currency pair for the week, fairly narrow trading range. This is a daily chart. And what we're seeing here is support at the lows in trading this week near the prior week's low. You can see that off the hourly chart. We had a low here, right here, and then we went and took out the low on Tuesday, only by a few pips, only to have the market start to move back to the upside here. We started to find some support against the 100-hour moving average, including trading here today and in trading yesterday. We went a little bit below it on each of the days, but not much. And I think we had a close here below most of the time this week. Has been traded above the 100-hour moving average, trying to find support where the 100 and 200 bar moving average are now converged. And so in next week's trading, we should see the price move away from this 100 and 200-hour moving average. This is what I call threes, a crowd. When the two moving averages come together with the price, the market tends to move away from it. So in next week's trade, we're going to look for a move away. Right now, the bias is a little bit more to the upside. As you can see, staying above the 100 and 200-hour moving average. We'll see if that holds through in next week's trading. We know the risk, though. Our risk is against that 100 and 200-hour moving average. We'll see what happens there. See if we get a little short covering to the upside against the 70 level in that currency pair. Well, that about does it for me here today. We have some ISM data, service data next week. Expectations are 58 versus 59. We're going to have the Australian interest rate statement also on Monday, or actually that'll be Tuesday in Australia. 2% unchanged for that. Trade balance also coming out in Australia. On Tuesday we have Canada trade balance, also U.S. trade balance, and get the monetary policy statement coming from the Bank of Japan as well on Tuesday into Wednesday. On Thursday or on Wednesday we have UK manufacturing production. We also have Canada building permits, and on Thursday we have the interest rate statement coming from the Bank of England. No change expected in that decision. Unemployment claims for the U.S. will be released, and Bank of England Carney speaks at 2 p.m. FOMC meeting minutes will also be released on Thursday, October 8th. And finally, on Friday, we're going to get the Canada unemployment statistics coming out for them a week from today. So that about does it for me. Have a great weekend, everybody. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.